to this session looking at two reports from the European Business Tax Forum on public country-by-country reporting and good tax governance. My name is Tom Dane. I'm a director here at PwC in the tax transparency team. Welcome to those of you in the room, and also a very warm welcome to those of you joining us online. Apologies for the couple of minutes delay getting going. We were just sorting out a couple of technical issues. So the programme for this afternoon I will introduce in a minute, but we're going to hear from some really great speakers. So we're going to have a little bit of an introduction to the EBTF from Paul. We're then going to hear about two results, the results of two studies, one on pCbCR and one on good tax governance from Mai and Giles. We're then going to have a panel discussion, which I'm very much looking forward to chairing, talking about what we've heard from the reports. And as I say, I think that's going to be a really fascinating discussion. If we could just move on to the next slide and the next one. So yeah, and here we go. Some housekeeping points. So first of all, for those of you in the room, this is the standard fire safety briefing. We are not expecting a fire alarm this afternoon. So if you hear one, it's real. Please follow me or one of the other PwC people. For those of you online, if you have a fire alarm, you do you. We're not responsible for that. The event is being recorded. Please just be aware of that. And we will share the recording afterwards. For questions, both sort of during the session and particularly for the panel discussion, we're going to use Slido. So there's a QR code on your screen or on the big screen here for those of you in the room. Please snap that on your phone and go to the Slido panel to ask questions. We're also going to do that for the people in the room, please, rather than taking questions sort of live in the room, just because for the benefit of those online, I thought you will all have experienced in these sorts of settings, using microphones gets a bit tricky. So please ask your questions using the Slido, and then those will get passed to me as moderator. So really looking forward to some lively discussion. As I say, I know the panel have got some great thoughts to share with us. But before we get into that, I'd just like to pass to Paul to introduce himself and also a little bit about the EBTF. Thank you.
Thanks, Tom. Hello, my name's Paul van Sloen. I'm a senior tax director with NXP in the Netherlands. Next to that, I recently joined the EBTF board, and I've taken on the role as treasurer. And for those of you that don't know the EBTF, it's a organization of around 16 to 17 multinationals. We want to contribute in a positive effect to the existing public tax debate. And the way how we do that is that we provide data to stakeholders. We want to undertake research. We publish reports. And in order to do that, we also leverage on the existing advisors. We engage with other parties or organizations like ours that have similar goals, and we work together with universities. A recent example of a university is the study that we did with the University of Amsterdam, and we also work together with Vienna. And Mai and Giles will later on show you a couple of examples of studies that we've undertaken. I often get asked the question from, hey, why should I join the EBTF? What's in it for me? And the clear answer to that is that you get to embark really on the forefront of the whole public tax debate. You can give input, and also you can take input for your own internal discussions you're having with your company to design a tax policy. So it definitely works two ways. So should you want to consider to become a member of the EBTF, do have a look at our website, or send us an email, or speak to us. a lot of board members are all available here today to talk to. And should you have any questions, then please reach out to me. Having said that, Mai, I'm going to give the word to you for the first results.
Hello, everyone. My name is Mai Trin. I am Head of Tax Risk Reporting and Reputation at RELX. I've been a member of the European Business Tax Forum for 6 years, and this year I've joined the management board. One of the things that I really like about EBTF is an opportunity to work with other European multinational companies on a journey towards greater tax transparency and together raising the bar in the public tax debate. Country-by-country reporting is an important part of that journey. And so it's a real pleasure for me to present to you the third tax transparency and public country-by-country reporting of the largest European companies. So what is the report in a nutshell? Well, we survey 43 of the largest companies headquartered in Europe. And you can see that when we first started the study a few years ago, we started with 11 participants. And over time, now we've grown to 43. During that time, the international focus on tax transparency have expanded rapidly. So I'd like to take this opportunity to thank all the companies who participate in the study. And for those who have not joined us yet, we hope that will join us later this year, because the more companies and the more data that we have, the more meaningful analysis that we can provide. The study is conducted by pCbCR, who we have worked with for many years. They've done a great job collecting a vast amount of data across 5 different industries and 180 countries, and been able to draw some really useful insights analysis. So thank you, pCbCR, for all the great work that you do. And pCbCR data that we present today is for the 2022 year end. So in terms of the highlights of the reports, the first highlight is that country-by-country reporting focuses on corporate income taxes. And you can see on the chart that the corporate income taxes paid by companies of the study is 105 billion. Corporate income taxes is important. However, it is only one part of the overall total tax contribution of companies, which for the study is 326 billion. So when you look at the corporate income taxes paid, that is a big proportion of the total taxes paid. And for 2022, that is the case because you got companies within the energy utilities sector that have got high profitability. And also there's been windfall taxes imposed on the industry. Apart from corporate income taxes paid, there's also other taxes paid of 58 billion. And they relate to other types of taxes paid, such as payroll taxes or indirect taxes. And we also have 162 billion in relation to total taxes collected by companies for governments. So when you look at this report together with the total tax contribution report that we released back in December, then the message is clear that corporate income tax is an important but only a small part of the total tax contribution. Now, this map shows the divergence of the implementation of public country-by-country reporting across Europe. And there are quite a few examples here, but I'm just going to draw on some of them. So Romania is an outlier in terms of reporting obligations. There's already some obligations due by the end of this year. We also have Croatia, who's one of the early adopters. And apart from the kind of different reporting dates, there are also different additional requirements depending on which country it is. So for example, in Hungary, multinational companies are also required to provide additional explanations in terms of tax accrued and tax paid. So how do companies deal with public country-by-country reporting? in order to help support companies to get on the front foot of communication and provide a comprehensive and clear tax narrative, in the report, we present a 10-step approach. So the first step relates to stakeholder engagement. This is about developing an internal country-by-country reporting strategy and get the various internal stakeholders on board. So it could be in your investor relations team, your finance team, various business units, because the report doesn't just have tax data, but it also have other financial data. For example, you can see information on revenue, profits, and the profit margin by country. And so it's important to get all the different internal stakeholders on board. And it's also important to get all the senior management on board as well in terms of audit committee and the board in order to reinforce the commitment of a company to tax transparency. Then we've got from step 2 to step 5, we have got the steps relating to data analysis. So there are some practical steps that a company can do to ensure data accuracy and reliability. So examples could be some checks and validations, reconciliation to financial statements, performing trends and outliers analysis, and also doing comparison against your peers. Then from step 5 to step 6, you've got compliance. An example of that could be looking at which jurisdiction should be filing the public country-by-country reports, conducting analysis on transactions with entities in the EU's grey and blacklisted country list, and making sure that the reporting is comprehensive and transparent in those high scrutiny areas. And lastly, the step 7 to 10 relates to disclosures. So it's about compiling the analysis into a clear and publicly available report. Then we have aligning the narrative with other parts of corporate reporting, preparing an internal Q&A for potential stakeholder questions, and also considering other voluntary disclosures. So for example, are there any additional disclosures that you can make in the context of the company's tax strategy, tax governance, and ESG objectives, which you can then publish as a complement to your CBC report. And the last highlight of the report relates to Pillar 2. So that's a very hot topic. So the Pillar 2 safe harbors elevate the importance of public country-by-country reporting from a high-level assessment instrument to a central element of the Pillar 2 top-up calculation. However, in order to Pillar 2 safe harbors to be applicable, then the data needs to be qualifying. And this comes with its own challenges. And we've got some examples here about, for example, the wrong source of data being used, the need to adherence to the country-by-country reporting guidance, and the difficulties of producing the report. So we're not going to go through these in detail, but these are some of the teasers of the examples, and we'll invite you to read the report for further details. So on a closing note, I'd like to invite you to read the country-by-country report, which will be published later today. And as public CbCR is becoming increasingly mandated, then the report focuses on some challenges as well as the opportunities that lie ahead. In terms of challenges, these relate to the divergence of implementation of country-by-country reporting across Europe. There are increasing compliance burdens, and also there's a risk that the CBC data could be narrowly interpreted and leading to misrepresentation of a company's tax position. On the other hand, you've got the opportunities. So it's an opportunity for companies to reassess their tax transparency strategy in the wider context of tax governance, sustainability, and ESG objectives, provides comprehensive and meaningful data and narrative, and presents a coherent and complete picture of a company's tax affairs to stakeholders. So thank you very much, and I hope you enjoy the rest of the session. And now I'd like to pass on to Giles, who'll provide an update on good tax governance.
Thank you, Mike. Of course, want to work out how all this works. There we go. I'd like to start with an apology. I'm going to have to read some of my notes. That's not because I don't know what I'm talking about, but I know if I just speak to the slides, I'll be here and speak. I just want to make sure I pick up the important things. It says I'm from the Tax Executive Council of the Conference Board. I'm no longer really a member of that council, though I have been associated with it since it started over 20 years ago. I started getting involved in the Best Practices for Good Tax Governance project before I retired 6 years ago, and I thought when I retired I'd got rid of it, but I'm still here. What I'm going to talk about is an update to the original paper we issued in 2022 on best practices in good tax governance. That was launched during lockdown, so we didn't have an event like this. After that, we recognise that then there are questions that need to be answered. This whole area is evolving rapidly, and so what we're doing is issuing a discussion document to invite comments. It's a final discussion paper, but it's intended to invite reactions from you. It's participants from 3 organisations: the EBTF, the Tax Executive Council of the Conference Board, and the B Team. And I'd like to express our gratitude to the members of those organisations who have participated. Without their involvement, we wouldn't have got where we are today. And I have to say, it's not every member of these organisations who have participated, but those who have, we're extremely grateful for them. What I do have to say, of course, a normal disclaimer: the views expressed are not necessarily those of the EBTF, the Conference Board, or the B Team, and are not necessarily the views of every member of those organisations. What we're doing is sharing our views of where we are and where we should go. We do really need input from other people, not just within tax. Are we going in the right direction? How could it be improved? So since we launched the first paper, there's been quite a lot of developments. One of those was we had some shared experience, facilitated experience sharing sessions between members of the 3 organisations who have all implemented tax governance. About 16 members participated, and what we did is gathered all their feedback and thanked them for their honesty about what went well and what went badly about their implementations, and drafted the report based on that. We recognise there's increased interest from tax administrations in tax governance. The original launch, we had very interested participation from the ATO and from the HMRC. We know other tax administrations are interested in tax governance as a way of measuring risk. There's clearly much greater increasing recognition of the importance of stakeholders and how to interact with stakeholders, and recognising what stakeholders need and want, and that clearly has a link into tax governance. I don't need to talk to this group about how ESG has had greater recognition. But despite all those changes, there's still a perception problem that people think that tax is multinationals are avoiding tax and don't understand how it works. And one of the benefits of tax governance perhaps should be of explaining to interested or even not interested people, how does it work in practice? The discussion paper is not a complete rewrite. What I'm talking about here is 8 areas we identified where there are potentials for improvement or extension, and we're sharing the discussion paper to get your feedback on them. Right. A brief comment about the improvement of the integration of tax governance. Everyone who participated has implemented tax governance, and the view of all of them was that it's much better if it's integrated with an enterprise tax governance process. And I think to turn that around, you can't implement tax governance by yourself in tax. It has to be part of an enterprise improved governance process. And I think one of the reasons for that is tax governance doesn't just cover tax. What you're talking about is getting information and processes that take part outside of tax. So there needs to be a process that governs that to ensure that tax delivers what it wants. So it needs an enterprise leadership. One of the areas of most importance we need to talk about is a better understanding of stakeholder needs. I think all our participants have recognized that a single disclosure of information to stakeholders doesn't really deliver what they want, and feels like a missed opportunity. Recognize that different stakeholders have different levels of knowledge and expertise and use disclosures in different ways. So the question is, should there be an attempt to engage with stakeholders to modify the disclosures to provide information that's of more use to them, more nuanced, and provides them with much better information which to use for their purposes. So we see that there are potential benefits in amending disclosures and providing more and more focused information. And one of the most important stakeholders here is, of course, the tax administration. We recognise that they are a big stakeholder, and information that may be provided for in general may not be very helpful to a tax administration, whereas the level of detail you might provide for a tax administration isn't of that use to a potential investor. How do you square that circle of delivering better information to some people, more detail to some people, or do you deliver more information to everybody and run the risk of some disclosures have been met with deafening silence? So another question maybe for stakeholders: how can we deliver things that are useful to you and don't in the end seem like we're wasting our time in telling you stuff because you're not doing anything with it? And that's very closely linked to transparency. As we've heard today, CBC and total tax contribution are becoming perhaps a benchmark of what best practice is or what should be done. And the participants in our study who have made greater disclosures have mostly expressed the view that to be useful to readers, more explanation needs to be given. You can't just give basic data. You need to give context, explanation, and greater depth. But while there's a consensus that maybe disclosures should have more information attached to them, I don't think there's any consensus on what should be done and how. So that's something where we'd welcome feedback. And that then leads to consideration of, if you're giving more data and more supporting information, should you also be disclosing other matters apart from the numbers? What about tax risks? What about how you manage risks? What about active disputes or uncertain tax positions? Should those be disclosed? How and to whom? And that kind of leads on into data. It's clear that greater transparency needs more data. Good tax compliance needs more data. So therefore, tax governance should probably cover the delivery of data, because the experience of, I think, everyone in tax is data is not within the control of the tax department. It comes from all kinds of areas within the enterprise, from all kinds of systems. It's generally regarded as tax's fault if it goes wrong somewhere. But a common experience is, if you ask who owns the data, the answer is, I don't know, somebody. So therefore, should data become more involved? Should tax governance be expanded to more formally include the provision of data, because it's critical for a lot of areas. We also need to recognize that more data, particularly additional disclosures, create challenges of extracting them because they're not in core systems frequently. Some enterprises may have an enterprise system where you can pull everything. My experience is most enterprises don't have that. But, so extracting the data is a real challenge. And if you are disclosing it, how can you be sure it's right and reconciles to your audited accounts or other disclosures? And we are aware of some organizations who'd like to disclose more but feel they can't, because they can't confirm that the data is absolutely right. We don't have a solution to that, but it's a challenge that's recognized. And that, of course, leads on to controls. A basis of tax governance, as far as everyone who's implemented one, is you need a good tax control framework, because you can say, I want the tax to be governed this way, but you need some way of ensuring that it's actually done. And because most of the relevant operations are outside of tax, you need some kind of process to ensure that people understand what they're doing and are actually delivering that. The experience of everyone who we've spoken to is that the tax control framework is specific to them. It's based on what the enterprise does, its business operations, its governance, its leadership from the top. So it's tailored to that enterprise itself. One size does not fit all. So I don't think it's possible to say this is a tax control framework model that everyone should follow. All you can say is it should deliver these things. It's recognition that monitoring and enforcement enterprise-wise is essential. I couldn't detect any consensus on how that should be done, whether it should be real-time, retrospective, box checking, interactive. It should be done, but there's no consensus on how it should be done. So that's an open question. And then that leads on to another open question, which can become quite controversial. There must be some level of internal review. Is that just a review by the tax department? Is it internal audit? Is it external audit? And what on all the implications of that? And that's again an open question. So some enterprises it needs to be monitored and audited by external bodies. In some it doesn't. Is there a general practice on that? And that kind of leads on to roles and responsibilities within tax. Tax governance is dependent on a lot of people doing things throughout the organization. How can you be sure they're actually doing that? That means they need to be clear on what their roles and responsibilities are. And that's not just putting it on a piece of paper. It means them really understanding what their roles and responsibilities are and making sure that they deliver on that. And the critical role of the process owners, people understanding this is my responsibility. This is how it fits in. This is what I should be doing. I don't think anyone has rolled out a process that is foolproof on that, but without clear understanding of roles and responsibilities and how they change, it's difficult to have a robust and reliable tax governance process. And that kind of leads on to an area where every tax director has been complaining for years and will continue to complain for years. I don't get involved at the right time. Things happen without my knowledge. Maybe naively, some tax directors expected the tax governance process would help that, and the experience is it's not really done that. Tax feels they want a seat at the table, however that is defined, and it hasn't been delivered as a part of the tax governance. They're still finding out later about what happens. But how can you develop a process that involves the right people from tax at the right time without an excessive bureaucracy? Nobody has an answer to that, but it's something that needs to be worked on. And linked to the previous thoughts about roles and responsibilities, how do you encourage the recognition by process owners and operators outside of tax of their responsibilities and how they embrace those? That needs greater education and training of people throughout tax, throughout the business outside of tax to understand what they're doing. I think there's recognition that needs to be done. I don't think anyone has a good way of doing that, but if anyone has any solution to that would be good, because people need to know what they should do and why it's important. My experience of rolling out things like this is if you explain, sometimes people get it. Oh, that's what I was filling in that information for, and they then feel more accountability for it. But it's a long process, and I think looking at a tax governance process, it expects a number of behavioral changes from people outside of tax in order to deliver the governance that tax wants. I'm coming to the thought that maybe a good tax governance process requires behavioral change everywhere, including tax. Tax can't just sit back and say, you guys should change. Tax needs to change their behaviors, change their experience, change their relationship with business to become much more of a business partner. And then I think tax governance would improve as a result of that. Personal view. And finally, sustainability and governance. ESG is clearly becoming more important. There's the G in ESG is governance, so therefore that must have a link with tax governance. We assume it does. Did hear quite recently as part of our discussions of some concerns expressed that ESG assumes a level of social responsibility around the enterprise that may result in, or may suggest, that the tax results should not be entirely in line with the legal obligations in every territory. That may be a misreading of what ESG is, but as there's a concern about that, I think that's something that should be explored and clarified. Because I know some tax directors are worried that we can't deliver ESG because we have to obey the law in every territory. So where next? Basically, two things. We really do need feedback. We need your views on what we've done and where we're going. So what do stakeholders want? You as stakeholders, internal, external, what do you want? How can governance be improved? What suggestions you have for how it can be improved? And perhaps a final fundamental question: is it useful? Is it delivering what you want? Are we wasting our time? Hopefully the answer to that is no, but or if it is, then I can give up tax completely. Thank you.
Thank you very much for that. That was some really interesting thoughts there, which I'm sure we will come back to in the panel discussion. So with that, if I could invite the panelists, please, to join me on stage. And again, for those of you in the room and online, you can see in the corner there is the Slido code. So please do use that to ask any questions that you may have. But before we sort of dive into questions, I could just ask each of the panelists to briefly introduce themselves. So start with Michael, who's next to me, and go along.
Sure. Yeah, thanks, Tom. So my name is Michael Ludlow. Up until March or April, I was the chair of the EBTF. Please say I've now handed that over to Alessandro, who is a more than capable replacement. I was the former head of tax at Swiss Re. Sorry, I am the former head of tax at Swiss Re. I'm currently transitioning into a new role, so I'll be joining Lloyd's of London as of the end of August as their head of tax. So at the moment, I am speaking for nobody apart from myself and my own personal views.
Lars.
Thank you, Chair. My name is Lars Andersen. I'm the head of the office in the last taxpayer unit, Danish tax authorities. I'm a master in auditing, working for the tax administration for over 26 years. Joining also when I'm here, joining the University of Vienna, working with the handbook of good cognitive compliance. So that's my question for this.
Thank you.
Good afternoon, everyone. My name is Kerry Blaker. I'm a senior tax policy manager at Anglo American. One area of my job is responsibility for our tax transparency reporting. So our primary report is our tax and economic contribution report, but we also publish our pCbCR and our payments to government report annually. So this is a very topical discussion. We're also members of the B teams, which input into some of the reports we've discussed this morning. And part of that, I was a director at Deloitte, working with Extract.
Thank you. And finally, Matt.
Good afternoon. My name is Matt Janassi. I work at Norges Bank Investment Management, based here in London. I am in the active ownership team, and I sit in the social team. So we kind of put tax in the S rather than the G, but I don't think it matters too much for these purposes. Our team is responsible for engaging with companies in our portfolio, publicly listed equities. We have about 9,000, totaling about 1.6 trillion US dollars. So we engage with companies on a range of sustainability topics. I'm responsible for tax and anti-corruption, as well as some sectoral coverage. Some time ago, I started my career as a tax lawyer before moving into extractive sector tax policy, and now working on the investor side.
Thank you. So that's our panel, and as you can hear, a huge range of experience there, covering not just sort of the business view of people working in tax functions, but also tax authority and more of an investor perspective as well, which I'm sure the panelists will bring to the discussion. So I'm sure you must have questions for for the panel, given that range of experience, please ask questions that will make the best use of the experience we have. But to get going, we've just heard about two great reports. So the public pCbCR report, and actually I just echo my thanks to the companies that provided data or allowed us to use their data for those reports. We couldn't do it without their cooperation, so a huge thank you. So I've got the public pCbCR report, and then also that discussion paper on good tax governance, which I thought had some really great insight about some of the challenges. And as Giles said, many of those are questions without answers at the moment. So I'm just going to put you on notice that I will be asking for some answers on some of the questions that were raised. But to start with, if I could just ask each of you to pick out one or two things that really resonated with you from those reports that we've heard today. Switch it around a bit, if I could start with Lars.
Yes. First of all, the tax authorities will really welcome this report. I think that it's important for the thoughts from the businesses breaking into the tax authorities, because when you look at good tax governance, it's mostly important corrective compliance programs. And this is really built from the tax authorities. I recognize that in some countries there has been a discussion between business and tax authorities before the published the report, the way to work. But now we had some wonderful reports that we could take to work with further when we have these programs. So I'm really welcome.
Thank you. Terry.
My two takeaways, I think, on the total tax contribution report, it's the importance of context. We're going to see a lot more data with public pCbCR coming in across the EU and in due course Australia. But it's understanding what the data and the context to the data. Corporate income tax is only a small proportion. And when we do our total tax contribution report, even if you add up all the tax contribution, the procurement data is larger. So it's trying to understand the context. I think it's really important. And I thought it might be section 3 or maybe section 4 that talks to how to put your pCbCR data into that bigger picture, how to tie it into your strategy and the governance and, seeing it as part of ESG. I think there's a bigger piece around the context. And then on the governance paper, what I'm particularly interested in was the section on controls. The paper talks about TCFs as being an internal tool. And of course, obviously it is in the main, but I am personally quite interested in the work of Vienna University when it's looking at can TCFs be part of an exercise to build greater trust with tax authorities in particular. So I think their report delivers in October, so it'll be interesting to see where that lands.
Thank you. Michael.
Sure. So I think maybe sort of the big picture piece I take away from this is a point that Giles emphasised, which is that despite all the measures that happened in the last 10, 15 years that we know of, there's still a fundamental lack of trust in multinational tax affairs from the public at large. And I suppose the question I then ask is, having been working in tax for long enough now to have seen a real transition from 20 years ago, where fancy structured finance type tax-driven transactions were quite commonplace, to today where we're talking about public country. Right answer to that, because I think whilst absolutely it has some value for the reasons Kerry just outlined, but also as Mai said, there's a lot of challenges with pCbCR. We know that there's different reporting bases. We know that it's only looking at corporate tax rather than TTC, but we also know it's only a snapshot in time. So when you look at 1 year's corporate reporting, you see corporate income tax. Now, it may be that you haven't paid, business tax losses or whatever it may be. How do we stop the genie getting out of the bottle in terms of commentary on that? People saying, hey, company X doesn't pay any tax in this jurisdiction because. And the narrative in this current environment, we're very soundbite driven. As soon as you have to explain something, you've lost the argument. So the problem with public CbCR to me is that the argument can easily be out there and lost before you get a chance to it. Now, I do think the solution is in good tax governance, but as we also heard, and this is meant in the best possible way because we all care about it in this room very much so on the call, but good tax governance is one of the drier parts of the tax, right? So how do you excite people that we're doing the right stuff and that we're actually making decisions for the right reasons? And I think that's the biggest challenge.
And I think we will come back to that because I think that's a really good point. We've been having tax transparency for a number of years. Has it shifted the public dial? Will public CbCR do it? If not, what do we do? We'll come back to that. But before we do, your reflections, thoughts, Matt.
Yeah, thank you. Well, first of all, I just want to congratulate everyone involved. I think the reports are excellent. We've found them to be quite useful, particularly the tax governance report, I think gives us real insight into the kinds of questions that we should be asking as an investor when we're engaging with companies. What are leading companies doing here? We have used that from the time I started with NBIM. We've looked to that document as kind of a touch point for kind of revising and analyzing our own engagements. So I just to congratulate. It's a lot of work behind that. I think it's really valuable, and it also kind of lifts standards across the industry, which I think is very helpful for us, and we appreciate. I think a lot of the other comments also resonate with me, but I wanted to just focus on some of the language in the reports around cost benefit, and how do we make these efforts in public CbCR, the cost benefit trade-off work out. And I think in some cases the benefit side is there's a tendency to think of benefits in terms of additional revenues or trust. I think a missing piece there, which comes up in some of these discussion papers, is other stakeholders' expectations. And I think from our perspective as an investor, we think public CbCR is going to be really critical to how we evaluate tax risk and how we better understand how companies are managing their tax risk. So that's we also think it's really important for trust with the public and other stakeholders. So and a key part of that really is as you mentioned, the narrative and the importance of the narrative. So it's not just about the data, but it's about looking at the data with a critical eye, understanding what stakeholders are looking for, what questions they might raise, and not, I think as Giles put it in the last session, not missing opportunities. So I think, there's a lot in these reports that really resonate with our approach, and we look forward to kind of tracking progress on this.
Thank you. One thing that I've heard there is that public CbCR is part of the tax transparency picture, but is not going to solve everything. And then Matt, you've said that from your organisation, you're using, or you will be using, that public CbCR data to look at things like assessing tax risk, because as we know, public CbCR is upon us. It is a fact. It is going to happen. So that's how you're planning to use the data. But for the others on the panel, if I could ask, what are you planning either to do with public CbCR data if your organisation is on the receiving end, or if you're going to be generating it in the case of businesses? What impact is that having on you already? How is that changing your business's approach to tax, if indeed it is? Maybe if we start with the tax authority view.
I think about the public CbCR report, a little bit more laid back because we have the report for coming years now. So that's that way is nothing new that the business had to publish. But what I see, it's not only for the CbCR report, also ESG and the tax strategy and something. The business are published everywhere on the homepage, and there's awareness of taxes, and this awareness of taxes is growing in the businesses, and at the same time the awareness is going to the top of the board. So it's not only a tax manager and a tax authority guy who talk to each other. Now it's sometimes it's the top of the toe who has split the strategy to the organization. That tax is important also for us now. So I think that's the most important thing I read from the public CbCR.
And I think that ties in pretty well with something that Mike said, and also I think that Giles said on your slide where we had the 10 steps, there was that tone from the top. So that publication of the data, in your view, is helping to create that. And then we have Giles talking about, tax is not just the preserve of the tax department. You need the entire business to be behind it and to understand it. And so maybe the greater profile, because of public country by country reporting, perhaps we're seeing that in businesses. Kerry, is that your experience?
I think there's, it's definitely true that if you've got a board endorsement, it is just much easier to have the systems changed, the culture changed to ensure that the data is properly, tagged at inset and then mapped all the way through. It definitely helps us as a business deliver on our strategy, having it signed off by the board and having it as a board agenda item. So, I mean, we've been publishing our CbCR data for quite some time now, it feels. I think we first started publishing in 2020 based on 2018 data. You asked what we do with the data. I suppose we always look for outliers. We look for trends in particular countries. We personally took the decision to use the GRI format because it allows you to put in narrative to explain discrepancies. But it is CbCR, it is one data set. We still believe, the contextual data, you can't provide full context in the CbCR, which is why we've also got our tax and economic contribution to provide that wider overview. But I'm hoping that with more companies having to publish their CbCR, that it does help move the dial a bit in terms of the public discussion of corporate behaviour and respective tax. There's some way to go, but I think increased transparency will help. And to the extent it allows us to build on relationships and understanding based on data with key stakeholders, including tax authorities, including investor groups, but also including local communities, employees, civil society. I think that was really welcome.
Yeah, I think from my experience, I would entirely agree that tone from the top is super important. Whether public CbCR is the trigger or not is a different point, because as Lars rightly pointed out, most multinationals in Europe anyway have been filing country by country reports for many years now, and they've required sign at the highest levels. We've also had to publish tax policies, tax strategies, and that all requires board sign-off. So you're already getting the buy-in you need, and that really plays into the governance around that as well, because that helps you create the right governance framework. So I think that's really important. I think my bigger concern again on the public CbCR is just I fully understand what I think everybody else said there about this gives you a chance to open up a bit more, to give more credibility. It's just that risk of misinterpretation is slightly high, and I do think that's something we have to be really careful, because you can't expect Joe Public to read a narrative around the tax charge. It's just not going to happen.
Yeah, and as certainly those in the room, and I'm sure online now, some of those disclosures are complex and they are couched in what you might call tax language, which is sometimes not even very understandable to people who are experienced in even a different area of tax. And on top of that complexity, tax is different companies and different countries, and depending on the nature of the business. And as we heard from Giles, different stakeholders want different things, be they investors or tax authorities. So what can we do to help businesses understand what it is that their stakeholders are looking for? How do we answer that question? Transparency to whom and for what purpose? Anyone like to jump in on that? Matt, you look like you're hovering.
Sure, I'll come in. Well, I mean, I think the point was raised in the made very well in the discussion paper that engaging with stakeholders to better understand how they intend to use the information, what they're looking for. That should be a starting point. And I think we have the opportunity to engage. We are we're a minority shareholder, but a pretty big shareholder with most companies. And so we have the opportunity to engage at a number of different levels pretty easily. And I think we really stress the role, the importance of the board. And so trying to, when we want to speak to the board, let them know that we think of this as a sustainability topic. We want to understand from their perspective kind of how they're thinking about it. Also speak to the tax folks and IR to understand at the more nitty-gritty kind of technical level, what they're doing. But I think, I think that starting point has to be that stakeholder engagement.
Anyone else like to come in on
that? I would fully agree. I think we spent a lot of time reaching out to different stakeholder groups to understand what they would like more information on, whether that's data or an explanation, and whether that's investors or tax authorities or other stakeholders. Everyone's got a slightly different perspective. They want slightly different level of information or data. So it is a constant conversation. So in our case, we do go out and have solicit feedback on our reports with the intention of them evolving over time. They're not static. And if there's additional needs that we can easily cater for, then we will. So yeah, it's very much a dialogue at this point. After you cover off the mandatory reporting, of course.
And maybe quickly add on that as well, because I think that both of those two have answered that brilliantly. The one other group of stakeholders that are super important is your own employees, your own other departments within your business. And I think what's really helpful within public disclosures of any tax amount is the need to get buy-in. The accountancy team, across the risk team, across the reporting team, whoever it may be, so that you are joined up and you have got that governance process in place. I think I've said this before, but one of the key things we found from total tax transparency reports is how much employees like that as well. So they love to see that we're actually making effective contributions to society. The world has moved on in that respect, and that's really good from an employee engagement perspective as well. So all stakeholders.
I think for the tax authorities, there's an unlimited for more data, appetite for data. So I think it's important to get the right data to discuss with the company what is the right data to come up with the conclusion of what is the point we look at. But if we don't have this discussion, we just want to have more data. So that could be a problem.
Yeah, just never-ending data without actual information. It's a real challenge. Matt, you look like you wanted to get back.
Yeah, well, I just one thing I think I've heard this a few times, and it's a point I always try to stress. We often hear companies say, we put all this effort in, we've produced this report, descriptions of the governance structure, country by country reporting, but then nobody engages on it. And I think the point I always try to stress is that we very often look at these reports, look at the detailed descriptions of governance structures, and that's precisely why we don't reach out on the topic, because we see evidence there, that there's a strong management structure, that boards are thinking about it seriously, that the tax department's thinking about it seriously, and so we can move on. We have 9,000 something companies. You have to prioritize. It's hard to engage at scale. So it's just I guess a note of reassurance that often that effort is producing exactly the result that you're looking for, which is a trust that the companies have this in hand.
So no news is good, almost. So if you don't hear, you're doing the right thing.
Not always.
But as a business, I guess it can be a little dispiriting if you feel you're putting all this stuff into the void and you're not getting anything back. Which is why it's great to have people in the room. So we have a real audience doing something. Yesterday on a webcast, you're talking into a camera, nothing's coming back. It's a little bit dispiriting. So is there more we could do to improve that feedback loop, between stakeholders and companies?
I mean, I think once we have a critical mass of information or a critical mass of country-by-country reports, the level of understanding among stakeholders will increase dramatically. I think you see that in the extractive sector, EITI processes. There was a lot of concern that, as EITI was getting going, that information would be misinterpreted. It was open companies up to criticism, but I think, with enough information and, quite sophisticated civil society groups and parliamentarians and other stakeholders in these countries, I think the level of discourse, or at least my experience from the outside, others in the extractive sector might have a different perspective, but my impression is that the level of discourse around taxes improved in many of these EITI implementing countries, and I would expect something similar with country-by-country reporting when we see it more broadly.
And that's interesting because, a number of industries have been doing quite detailed reporting for a number of years, notably the extractives and the financial services. And of course, we have both of those industries represented here. So given that you've been doing this for a number of years, what benefits have you seen so far from the kind of industry-wide reporting on tax in FS and extractives?
To take that first, I think the most important thing is you offer trust, but particularly that trust. I'll put my hobby horse, the public perception, to one side. I think particularly the trust of the tax authorities. I don't work with the Danish tax authorities, never have done, but I'm sure Lars is equally of the same viewpoint. It's really good to be able to discuss with tax authorities in a much more open way the processes and how you do governance, so they can understand that actually you're not doing something for nefarious purposes. You may just be, that may just be an outcome of the way the business is being done. And sometimes, as we all know, tax isn't necessarily at the table to stop certain transactions happening. But as long as you can explain, because your overall sort of support and documentation shows that you're doing it for the right reasons, I think that's really helped to settle disputes, particularly now as we move into a more and more dispute-driven environment. We have more analytics, data, demand for cash, etc.
And from the extractive side?
Yeah, I share the belief that it has helped build relationships with tax authorities because it's a consistent, we've now been doing this public reporting consistently year on year. So it's not just a one-off report, it's building an evidence over a protracted period of time so that, you can have more directed conversations because there is more data over a period of time and there is a consistent approach to tax. And I think across the industry, it has also helped us all to raise our game collectively in the tax transparency space. We do spend a lot of time considering in-house and discussing, the approach taken by others to public transparency reporting to see, is there something we could do slightly differently, slightly better? Would it be more informative for a particular stakeholder group? So I think it has helped us all to lift our game somewhat.
And I always think that is the desire of a lot of the regulators, and we've seen this with corporate sustainability reporting directive as well, is that by requiring reporting, legislators are aiming to encourage the underlying behaviour that supports that reporting, because naturally enough, you don't want to make anything public that you don't have good confidence in yourself. Which brings us on to tax governance and control frameworks. We heard some really detailed thoughts from Giles on those. And obviously, good governance is important, whether or not you you disclose final information. So I'd just be interested to hear some thoughts from you around, how have you been working on governance in your organisation, and from those that are looking at it from outside, what changes have you seen over the recent years in terms of how companies are approaching tax control frameworks and good governance? Maybe if we start with the outside in view from Lars, what have you seen companies doing?
I have seen a lot of efforts from the companies working with the tax control framework, not only when we start in Denmark back in the corporate compliance program in 2008. Yes, they have the internal controls and audit by the external auditor for the financial region, not for the tax region. So we missed something, and this missing for internal controls into the tax returns, they have built on to the financial. So that's a really a step forward for the tax authorities.
Carrie, what's it looking like for your organisation?
So obviously there's I suppose my starting point with tax governance is it's the sort of bridge between the tax strategy and actual delivery on the ground. So it's how you operationalize your tax strategy and really live it in every jurisdiction every day. We have a tax risk management framework, we have a tax control framework, and we have supporting standards on niche, I say niche, on specific topics like incentives. So there's that piece, and as I said, earlier, I think, yes, it is primarily there to operationalize inside the business, but I think it is an interesting discussion with external stakeholders exactly how it works. And we have a page on governance in our tax and economic contribution report every year, because we consider it really important people understand how we actually live strategy. It's not just a document that's prepared, signed off, and then filed. But what's been interesting this year is that as a member of the B team, we have embarked on a self-review followed by a peer review process. So for those who don't know, the B team is an organisation that sets some guidance as to what good, responsible business behaviour might be. It's not a standard setter, but it's there to inform debate and direction of travel. And the process this year, for the first time, was there is a series of responsible tax principles. So as a business, go and reflect on how you are doing in terms of living those responsible tax principles. So you self-assess. But what has been very valuable is the discussion with a peer. So the B team have paired us with another multinational, one we didn't necessarily know beforehand. And the point of that peer review exercise is to discuss each other's self-assessments, to discuss what has gone well, but also, the harder areas. There are some principles in respect of incentives. That's, as a collective group, that is one of the areas people find harder. How do you define a tax incentive? What information would different stakeholder groups find useful? And the B team has released, I think it was last month, a report setting out how that peer review exercise went, gives some collated feedback in respect of it. But certainly as a participant, what I found most useful was the conversation, the dialogue, and really, exploring how different people interpret the responsible tax principles. So I see that as a piece of governance too. It's another way of being held to account.
I think the idea of buddying is fascinating, and I sometimes work in practice because we see lots of businesses. We sometimes forget that maybe when you're sitting there in your company, you might not have that interaction. So I think that buddying thing is a fascinating idea. How have you seen kind of governance and tax control frameworks evolve?
Yeah, sure. So I think I would agree that to me the tax governance framework is really it's the walking talk. It's the real truth behind how you manage tax in a function. And because of that, it's not a moment in time like some reporting maybe is not affected by natural catastrophes or by financial crisis. It's how do you actually do your tax? What is your intent? What's behind it? And because of that, it's really quite easy to have developed a tax governance framework within a big multinational because by and large, the board, the executives, etc., they want to be on the right side of the line. They want to be doing things in the right way. And we've been on this journey for a long time. And in financial services, as you know, it's been around 10 years plus the tax has been at this kind of level of importance. And we just built from there and going onwards. And now, obviously, more recently, the trend has been to interact that with sustainability and the ESG teams in whatever form they may look in your own teams. But how do you make sure that tax as part of the whole ESG spectrum is understood? So, yes, the governance piece, but the tax we pay, disclosing that, and also the environmental side. That's one bit of tax that we always give probably less attention to. But is there going to be any form of tax shift and real behaviour change in terms of that we can reflect in our governance as well? Personally, I doubt it, given the focus of country reporting, etc. But it would be nice if there could be. So yeah, I think the building out of those frameworks has been relatively straightforward.
But then it sounds like the challenges, and as we had regards to operationalising some of those and getting that down to all the relevant levels of an organisation. I know kind of Giles asked some questions about that, and I'll come back to that in a minute. But just to finish off this sort of question, Matt, from your perspective, how have you seen companies' approach to tax governance change?
I mean, I think in general, we see a heightened level of seriousness and see a number of leading companies that are really approaching the topic quite seriously. I think we operate, we have around 9,000 companies, so they're obviously across a large spectrum of practice in this area. So it's there are still quite a few companies for whom this is a topic that's difficult to engage on. It's hard to understand their approach if they have one. But certainly at the leading level, we see a lot of progress. The way we engage on this, there's not great data on this, but we can dig into individual company reporting and then one-to-one dialogue with companies just to better understand their approaches. And I should also say we're very privileged to be observers in the team Responsible Tax Group, and I think that's being a part of those conversations and kind of seeing a group that's seriously talking about ways to approach these issues and kind of wrestling with the trade-offs. I think helps us to understand what the leading edge should be and how better to engage. So.
Thank you. I just want to pick up again on that sort of how do you operationalize that, and then I'm going to come on to I've got an audience question here on artificial intelligence, which we'll move on to very shortly. But one thing that really struck me about Giles' presentation was the importance of the whole business to tax. And he said, how do you find out about things early enough? How do you do that internal education? And how do you make sure that numbers that feed into tax are correct and do what tax departments need to do? He said there was no magic bullet, no answers. But is there anything that you've come across that has helped with that in the organisations that you work in?
Yeah. I mean, I'd have to agree with Giles. There really is no magic wand. The best answer I can give is it's hard work. Having the right people who are well connected into the organisation to understand when things have a tax impact, who needs to understand what the impact of that would be, and what we need to do back. And I think you can set the tone from the top as the tax director. You can obviously make sure you've got the CFO and the other members of the executive bought into the tax strategy, and then it makes it a lot easier to cascade that message down. So I think the only advice I could give anybody else out there is just make sure that top you're demonstrating to your stakeholders how taxes, and it will make your team's job a lot easier in terms of them going to their stakeholders to be able to actually get themselves into the right place in the right conversations.
Kerry, I see your finger poised.
I mean, I definitely agree with all of those comments. I think the other piece is also just to remember that the data starts at the very bottom, and that people who are first inputting that data need to understand where that data flows through to. And people retain goals. So you need to keep reiterating the same message, especially for data that sits outside the tax function, where you don't have that same level of direct input. If you are pulling data into a total economic contribution report, it is a continual. There's absolutely true. There is no magic wand, but it is around clear responsibilities, whether you use a RACI, but it's also about continual dialogue, so business partnering and really explaining. Okay, you're tagging. You're sitting in country X. You're tagging an invoice. It's important. That you tag it correctly. It will pull into some procurement data. So yeah, it's at the top is really important, but at the bottom is important too.
Matt, not anything you'd like to add to that? I know you're coming at it from a slightly different angle, but
No, but one I really agree with Carrie, because data in the tax return is mostly, it's not from the data the department, it's from the financial department where it starts. So actually we have to look at if the control is in place before we could secure that this amount we have in the number of tax return is correct. So I totally agree with you.
a hard job there, because you've got the top and the bottom and everything in between. Yeah, it's such a wide-reaching question. This wouldn't be a panel discussion in this day and age if we didn't touch on artificial intelligence. And I've got an audience question here. And someone's asked, with the advent of AI in tax data analysis, what considerations should multinationals have regarding the quality and accessibility of the data they disclose? So, yeah, thinking about how AI is going to be used. What are the considerations for data? I can see thoughtful faces. Anyone like to have a first crack at that?
Sorry, it's fascinating. It's a really interesting area, isn't it? I mean, stating the obvious. I think there's a lot of time and effort at the moment being spent in the kind of pre-AI being widely adopted in still trying to cleanse tax data, then cleanse financial data overall, and having access to the right data. And I guess my hope and my sort of urge for the tax departments would be to really embrace the AI, because it may be that a lot of that work is unnecessary, because there is so much data out there. But if we can use AI effectively to actually drill in tag data for us and bring that into the right place, then to me that feels like that could be a brilliant answer, because no one wants to spend hours working over spreadsheets.
Or tagging invoices.
Or tagging, or maybe they do, but some people don't.
Anyone else? AI, what does that tax data?
I can just say from our side, I fully expect that AI will, a component of our analysis of the portfolio companies and their tax risk will come down to AI tools, whether those are off the shelf or bespoke. We already are exploring use of AI tools in assessing companies against all of our expectations. I think with the country by country information coming in, I would fully expect that would be a significant part of that AI toolkit.
Yeah.
Could I just ask a question around, the use of AI to do that risk assessment? We talked previously about the importance of contextual data. Do you have a feel for how confident you are that the AI tools of the future will take account of the contextual data and not just the numbers sitting in cell, X39, wherever?
I'm probably the wrong person to ask on that, but I would say on all the risk assessment, tax risk assessment work we do, the last stage is always a very labor-intensive kind of deep dive into the financial reporting. So I don't foresee a situation where that's turned over to AI anytime soon. I think that last stage is, yeah, likely to remain kind of a real deep dive sense check on things.
And from a tax authority point of view, you said you've already had access to a lot of country data already. Do you have roomfuls of people analysing it, or do you have kind of fantastic AI technology?
At the moment, we don't have a total AI computer system. No, we use people intelligence, but we try to put the data in some specific blocks where we could join outliers from that. That's where we are today.
Thank you. And I think with that, maybe sort of move to thinking about, well, what's next. If there are any more audience questions, please do feed them through. We've probably got about sort of 5 or 6 more minutes left of this discussion. If you've got a killer question for me to end on, that would be brilliant. Otherwise, I'm going to end up asking them, what they're going to do on their summer holidays or something to finish off. But thinking about beyond the summer and, where is all of this going? We've got raft of tax reporting, sustainability reporting legislation coming into effect over the next few years. What do you think businesses should be doing now to prepare for that? There was kind of one thing in particular that you think really businesses should be paying attention to get ready for this. What would your advice be? Why don't we go along and start with?
Sure. So on the assumption that the horse has left the stable and that it is all coming, my question would be firstly to think about, okay, so what's the value? So where do we have to do certain things? Obviously, you have to invest time and effort now in getting that right. But then also controlling the narrative on the pieces that you still have to get ahead of. You've got time to get your storyline right. You've got time to explain things in the right way. If you think about something like pCbCR, the great thing about pCbCR is the fact that we've got the safe harbor coming in pillar 2. Spend all your resources making sure you can get qualified pCbCR, because you don't want to be going wrong in any industry. If you can get that right, whether you agree with it or not, if you can get it right, that's going to save you a huge amount of time going forward. So I think it's just making sure you're planning it the right way.
I think two things. First of all, as Michael mentioned, the pillar 2, the CBCR, the information for the gear to be submitted. That's one thing. The other thing, which in the future, more and more tax authorities working with day-to-day data that they have to submit, not for the corporate income tax, but for VAT or duties or something, that the tax authorities should have access to the data, day-to-day data. So that's, I think, in the future, more and more countries go that way.
I think from our perspective and many, it's just getting your head around the various responsibilities under this. It feels like an avalanche of tax or wider sustainability data requirements, mandatory reporting. So it's just having real focus on what is mandated and real clarity within the organisation as to who is responsible versus accountable, informed, and all the rest of it. It is going to be interesting with increased mandated reporting, to what extent businesses on an ongoing basis have capacity for, taking things further forward from a voluntary perspective. And it is at times quite difficult when you don't get direct feedback, because, you're satisfying stakeholder groups. But when it comes to continuing to secure budgets to invest in transparency reporting, it's helpful to have a more active feedback loop. That's not to say that low tax, low risk rating is not central. It absolutely is. But some more immediate feedback at times would be helpful to secure the budgets, just to continue to push forward with the sort of voluntary reporting that, many especially in the BT, but in other groups are interested in doing.
I would maybe encourage companies to not to miss some of the opportunities. So, public CbCR, there are some information that's going to be reported on an aggregate basis. I think there are going to be a lot of stakeholders that look at that. As we've said, there's a lot of suspicion in this area. Going to be stakeholders that see these aggregated buckets and just think that all kinds of terrible things are going on when it might be quite benign. So I think looking at the marginal cost of doing kind of full country by country reporting in relation to the additional trust benefit that would entail, I think is something to keep in mind. So I think it would be quite a bit more, there'd be a lot more acceptance of this information and more engagement around it if there aren't these big aggregated pots that people won't necessarily understand.
Okay, thank you. And with 2 minutes to go, I've suddenly had 8 audience questions come in. However, given where we are for time, we will pick up 1 or 2 of them. And let me start with one actually on assurance, because, Matt, you were saying there, there's all the data. Is there something nefarious? Is it benign? What's going on? How can it be trusted? And obviously assurance might be one way of addressing that. So how critical is the integrity and assurance of tax data to stakeholders? And what best practices do you think multinationals should adopt? I think we're thinking here about, probably external, possibly internal assurance of specifically tax data. Anyone like to leap in on that one? I mean, are people thinking about getting data assured?
Yeah, it's a great question. Maybe we could all flip that back to you, Tom, because as the advisor, do you get clients coming to you and saying, hey, we want you to come and audit our CbCR, our TTC?
So yesterday we ran a webcast with the results of our review of the tax reporting, the FTSE 100. And in that, we asked the participants whether the tax data, public CbCR data they were looking at, full assurance, no assurance, or lighter touch assurance. And the answer was pretty split, actually, between not thinking about any and thinking of some lighter form of assurance. So maybe agreed upon procedures, for example. So we are seeing that there's not consensus. Obviously, there is an assurance requirement within EU public CbCR, but it's more of an existence test rather than looking at the underlying data. So then, final question from the audience. So what's actually driving multinational entities' behaviours here? Is it CbCR, or is it tax governance? Which of those is having the greatest influence on behaviour of entities?
Tax governance.
Hopefully tax governance.
Okay.
Yeah, I think it's the tax governance.
They're the same.
Yeah, we have unanimity on the panel. So with that, thank you all very much for joining us today. Thank you for your time. Really appreciate your answers to the questions. Thank you so much. And with that, I'd like to draw the session to a close. We've heard about 2 great reports that are out there, public CbCR, the discussion paper on good tax governance. They will be, if they're not available already, they will shortly be available on the EBTF website. Please do go and have a look at those. As we've heard, if people would like to participate in the CbCR study, get in touch. I hope you found this session interesting and useful, but we're always really happy to have feedback. So if there's other questions that you've got, ideas for what we can do differently next time, we would love to hear you. And once again, a final thank you to those of you in the room, those of you who've joined us online, and also for those companies that allowed their data to be used for the country by country report. We couldn't have done it without you. So with that, thank you and goodbye.